Good evening. Thanks very much for joining us on India Business Hour. I'm Shireen Bhan. The top stories that we're tracking for you this evening. Finance Minister Nirmala Sitharaman tables the economic survey 3 days ahead of the union budget, pegs GDP growth in the range of 6.8 to 7.2% next fiscal. This is a slight moderation from the current projection of 7.4%. The survey says steady growth amidst global uncertainty requires caution, not pessimism. The rupee sinks to a fresh record low against the dollar. The economic survey says the rupee is punching below its weight, but adds it does not hurt to have an undervalued rupee to offset the impact of higher American tariffs on Indian goods. Not all import substitution is desirable, says the economic survey, argues for lowering the cost of capital to support industries instead of raising import duties. The economic survey calls for progressing from Swadeshi to strategic resilience to strategic indispensability, bats for embedding India into the global systems to move the world from thinking about buying India to buying Indian without thinking. The economic survey recommends amending the definition of government company under the Companies Act, highlights that this would enable the government to reduce stake in select public sector enterprises to below 51% without losing control. The survey adds early evidence tempers extreme predictions on near-term job losses due to artificial intelligence, highlights a late mover advantage for India by adopting a bottoms-up application focused on strategy. The cost of chips and constrained supply remains a bottleneck. Dalal Street gains for the third straight session. The Nifty reclaims 25,400 mid-caps. Banks and all major indices close in the green. The global uncertainty provides an opportunity for India, says Petroleum Minister Hardeep Puri. Adds India has diversified sources of supply from 27 countries to 41 countries now to limit uncertainty. That's an exclusive. ITC meets estimates in Q3, revenue up nearly 6%. The new labour code impacts profit by 274 crores. Dabur also meets expectations with a 7% rise in profits, a 6% rise in revenue. Swiggy's Q3 loss widens to 1,065 crores due to Instamart losses and higher ad spend. The company red flags the impact on quick commerce growth due to what it calls irrational competition and cannibalization of bulk orders. Microsoft and Meta shrug fears of an AI bubble with strong quarterly earnings. Microsoft's capital spending jumps even as cloud revenue fails to meet estimates. Meta reports record quarterly revenue. Elon Musk's Tesla reports first annual decline in sales even as Q4 earnings beat estimates. British Prime Minister Keir Starmer calls for a more sophisticated relationship with China after holding bilateral talks with Xi Jinping. This is the first visit by UK Prime Minister to Beijing in 8 years as Trump's tariff onslaught strains Western alliances. The Supreme Court stays new rules by the University Grants Commission on caste-based discrimination, says the rules have very sweeping consequences and will divide society and lead to very dangerous impact. Maharashtra Deputy Chief Minister Ajit Pawar cremated with full state honours in Baramati a day after his tragic death in a plane crash. Thousands gathered to pay their last respects. Straight to the big story tonight. With 3 days to go for the union budget, Finance Minister Nirmala Sitharaman tabled the economic survey in the Lok Sabha today. Now, the survey has projected real GDP growth in the range of 6.8 to 7.2% for the next fiscal year. This is a slight moderation from the current projection of 7.4%. The survey has said that steady growth, global uncertainty requires caution but not pessimism. On inflation, the survey has said that both the RBI and the IMF have projected an increase in headline inflation, but within the range of 4%, adding that FY27 inflation may be higher than FY26. The survey is also making a call for moving from Swadeshi to strategic resilience for the next phase of industrial growth. It says India needs to increase its competitiveness and embed itself into the global value chain so that the world moves from thinking about buying Indian to buying Indian without thinking. The economic survey was tabled on a day when the rupee has hit a fresh record low against the dollar. The survey said the rupee is punching below its weight by underperforming in 2025, but also added that it does not hurt to have an undervalued rupee as it offsets the impact of higher American tariffs on Indian goods.
Currency depreciation that we are witnessing today isn't something unique to India. Countries which have a current account deficit have seen their currencies depreciate. If you look at the performance of currencies since the millennium began, the Indian rupee actually has done quite well. And the performance even since COVID, India is in the same ballpark, not an outlier. So we need to get the breathless headlines about the Indian rupee into perspective. What Korea, Taiwan, Singapore, Japan did was to support their domestic industry, but in return, demand productivity and export performance and measuring up to global competition within a limited period of time. So protection cannot be in perpetuity, and it should be in return for productivity and export performance.
Well, despite global headwinds, the survey has penciled in a 6.8 to 7.2% growth range for the Indian economy for FY27. It has also raised the potential growth rate for India to 7% from the 6.5% earlier. That had been penciled in around 3 years back. So both these numbers are very strong. The indicators are looking very good. The survey also says that the economy is on a strong footing and we have done well so far. However, the survey also talks about the global headwinds in quite much detail, and that has had an impact on India's capital flows and hence the Indian currency. The survey does note that the rupee has been underpunching its weight, and that probably has caused investors to make a pause as far as those capital flows are concerned. This needs attention, and this warrants examination. Having said that, the survey also talks about some other ideas. For instance, on the disinvestment front, the survey has given two options. If the government so desires and wants to sell stake, well, it can do so. It can bring its shareholding down to 26% in government-owned CPSEs, the ones which are listed and which are near the threshold of around that 51% to 60% odd. Bring it down to 26 odd percent basic shareholding without letting go of government control. That's one. Second, it also says that in case privatization at some point in time or eventually is accepted by the government or brought back on the agenda, well, then the government can actually dilute its stake below 51% through the market route itself, through the OFSSs itself. You don't have to really go through a strategic disinvestment process. So these are some of the other interesting ideas that have been thrown up in the survey, of course. This is something for the government departments to take up at some point in time. But overall, the commentary on the economy is extremely bullish. However, that needs to be kept in the context of the global headwinds.
Sapna, many thanks. An exclusive conversation with the Chief Economic Advisor is coming up for you in less than 10 minutes from now for more details on what the survey highlights. On to the day's market action. Dalal Street gaining for the third straight session with the Nifty reclaiming the 25,400 mark. The Nifty Bank outperformed with Axis Bank, ICICI and Federal Bank leading the pack. Nifty mid-cap closing flat but in positive territory. And of course, the Sensex and the Nifty are closing higher today, 220 points higher there on the Sensex. Global markets trading largely mixed after the US Federal Reserve decided to keep its key lending rates unchanged. Fed Chair Jerome Powell said the US economy has entered 2026 on a firm footing and the growth outlook seems stronger compared with where things were last year. Powell also offered a strong defense of the central bank's independence, arguing that it is a cornerstone of modern democracies. Of course, President Trump tweeting saying that the rates ought to have been cut yesterday. Gold continues its bullish run with prices surging to record highs, now above the $5,500 mark. Silver has also hit a new all-time high, above $120 an ounce. The rally in both precious metals fueled by a weaker dollar and investor flight from sovereign bonds and currencies. The US Fed's decision to keep rates unchanged has also supported prices, so there is no stopping gold and silver. FMCG giant ITC reporting steady Q3 results. Numbers broadly in line with estimates. The company's revenue up 6%. Margins came in at 34.8%. Net profit, though, did decline nearly 6%, primarily due to a one-time loss of 273 crore rupees because of the newly implemented labour code. Staying with earnings, FMCG major Dabur's Q3 performance was largely in line with expectations. Revenue up 6% on the back of a surge in rural demand and growth in international operations. Net profit up 7% while margins stood at 20.6%. Dabur also took a one-time hit of 15 crore rupees due to the implementation of the new labour code. Food delivery and quick commerce company Swiggy's net loss is above 1,000 crores for the second quarter in a row. This on the back of Instamart, the quick commerce company's losses and higher ad spend. The company said that its decision to withdraw the no-fee campaign impacted the quick commerce growth. Swiggy added that such investments to lower customer costs did not yield the desired growth amidst what it called, and I quote, irrational competition. Remember, Zepto had decided to go free of charge. Shifting focus to the defence sector, stocks have rallied in the last week in anticipation of a higher outlay for the sector in the upcoming budget. Remember, India recorded its highest ever defence production of 1.54 lakh crore rupees in FY25. Speaking to CNBC TV 18, former Defence Secretary Giridhar Aramne said he expects the defence budget to be expanded by between 20 to 25% in the upcoming budget.
Actually, 20 to 25% looks very feasible in view of several developments in the geopolitics during last 2-3 years. Defense capital expenditure itself is likely to grow because many systems which were ordered previously last 2-3 years are going to mature. Apart from that, there is complementary and supplementary expenditure from other ministries. For example, the infrastructure facilities being set up by the space. That is the capex. In that, 20 to 25% is quite possible. And I'm also talking about the equipment, stores, etc.
So watch out for the defence budget. Now, national headlines. The Supreme Court has put the new UGC equity regulations in abeyance till March 19th. A bench led by the Chief Justice Surya Kant said the provisions are vague and are capable of being misused, adding that they need to be revisited. The court ordered that the old UGC regulations of 2012 will operate in the meantime. Remember, the new regulations were formed following a PIL filed in the Apex Court in 2019 by the mothers of Rohit Vemula and Payal Tadvi to end caste-based discrimination on campuses. Maharashtra's Deputy Chief Minister Ajit Pawar cremated with full state honours in Baramati a day after a plane carrying him and 4 others crashed. Thousands of supporters gathered to bid farewell to the 66-year-old leader, an 8-time MLA from Baramati and the state's longest-serving Deputy Chief Minister. Pawar is survived by his wife Sunetra and sons Parth and Jay, who performed the last rites. Prominent politicians, including Union Ministers Amit Shah, Nitin Gadkari, Maharashtra's Chief Minister Devendra Fadnavis and Deputy CM Eknath Shinde paid their respects. Well, up next, a conversation with the author of the economic survey, the Chief Economic Advisor, V. Ananta Nageshwaran, joins us right after this short break.